traders, welcome to another episode of the trades you missed last week. So let's get right into it. So looking at the charts on a 5-minute time frame, as you can see here, we have a 5-minute time frame. Let's put our demonstration. So we have a fair value gap here that indicates a demand. So this is a demand, and before this fair value gap was seen, there was a trade here. We look for a fair value gap. This is a fair value gap here. This is one here. The market respected this fair value gap, created a break of market structure here, and tapped into another fair value gap here. So you see our market tapped into another fair value gap and moved to the upside. Now we have another trade here because this is also a fair value gap. So this is a fair value gap. What we need for markets is to give us a break of market structure. So this is a break of market structure right here, indicating that price wants to move up. So now price has created a break of market structure. Coming back to it, you see a demand zone that has a fair value gap. So now this is a fair value gap here. First, price created an inducement here. This is an inducement. Price took it and tapped into this fair value gap right here. So let's see how the market takes it from. So this is how the market enters this fair value gap here, and you take it below the previous low that created that fair value gap for your entry. So this is where you enter, and you either take your profit right above the immediate high here, or you take your profit at the beginning of that fair value gap on a higher time frame. This indicates a higher time frame fair value gap. So since you did not enter right here, at this spot, since you did not enter at this fair value gap right here, putting your stop loss below this low and taking your profits here, you add another chance to enter right here, giving us a risk to reward of 6.6. So let's move on to the first trade that was cited. So let's take this out, and we see a fair value gap here. Let's go to our 15 minutes time frame to be clear. Now you can see on our 15 minutes time frame, you can see a fair value gap right here. This is a fair value gap here. You see how market is reacting to this fair value gap. This is a fair value gap right here. You can draw it down to this spot here, because on a 30 minutes time frame now, and you can see a fair value gap right here. See a fair value gap here. You draw it to the end and drag it. Let's take these ones out. So we have a fair value gap here. Drag it to the end of that low that created that fair value gap. And when you drag it to the end, you see how market reacts after touching that fair value gap on a lower time frame. So let's move on to our 5 or 3 minutes time frame to be clear. So remember what we need to look for after tapping into that fair value gap. We go on to our smaller time frame. If we can't find it on our time frame we are using at that moment, we go into our smaller time frame and we look for our break of market structure like we always do. So this is our break of market structure right here. You can see a break of the market structure now, 3-minute time frame, and we can see a fair value gap right here. This fair value gap, we have to drag it, take it, and we have gotten our entry because we have a fair value gap and a break of market structure. So this is our entry from the start of that fair value gap to the end of the low that created that fair value gap, and we take our profits here, or the start of a new fair value gap right here. So let's try this and see what we have. We have a 2.89 risk to reward ratio, but price actually didn't stop there. Price went ahead and took out this high right here. So this is our first trade. You can see dragging this to the right, see our price took out this high, giving you a risk reward of 5.68 profits. So that is our number one trade that we'll be looking at. So the next trade is this on a high time frame. What you have to look for is our break of market structure and a fair value gap. Now you can see a fair value gap right here. You can see a fair value gap right here, but there was no break of market structure here. Market broke it, but did not close below it. You can see market did not close, just the wicks. Can you see the wicks? So these are the wicks, but market did not close below it. If market had closed below it and come back to tap into this fair value gap, it should have been a good entry. Well, let's see where markets broke. So this is where markets closed below. This low right here, market closed below it. So what we need to look for is a fair value gap around here. Market might come back to these spots and fill this fair value gap and rally to the downside, but market use this fair value gap. Market use this fair value gap and rally to the downside. Sell right here. So you take your stop loss and put it right above the high that created that fair value gap, and this is your entry right here because market closed below this low. So giving you indicating that price wants to rally to the downside. So what you need to do is take your profit down here below this low right here, and you can also see that this low, after this low right here, we have a fair value gap. So this is enough spot for you to take your profit. So that was our second trade right there. So let's move over to our third trade. So remember that this was our fair value gap that we highlighted here for our first trade. Now after market tapped into this fair value gap right here, it created a fair value gap here, but after creating the fair value gap, market did not tick any high, did not give us a break of market structure, so we still have to wait. So now market just created another fair value gap right here and did what? And created a break of market structure here. So market took this high, indicating that it might want to rally to the upside. Once price taps into this fair value gap here, it will have to rally to the upside. So let's see how price did its work. So now we have a fair value gap here. We take it down and we take our profits right here. We take our profit right here, or this spot here. So let's see, I'll take profit to be below the low of that low that created that fair value gap. So this is not up to a 1:1 risk to reward, so we take it here. So we have a 1.72 risk to reward ratio, but that might not be enough, and taking a partial here and leaving your trade to this previous high would have been a good trade, but price did not take out this high. Instead, price rallied to the downside and took out the trade here. So should have been a good trade if you take your profit right above this high right here on a 5-minute time frame. And the next one we have is our fourth trade. As you can see, we still have price tapping into that same fair value gap. After price tapped into the same fair value gap, what do we have? A break of market structure, right? We have another one. This is our fourth trade. A break of market structure is here, and we have a fair value gap right here. This is our fair value gap right here, and you drag it to the downside, the end of that high that created the fair value gap, and we take our entry from here, or from this order block right here. This is an order block right here, or you can just take your entry from this fair value gap. So for more risk to reward ratio, we take it from this order block right here, and we take our stop loss right here below this low here, and our entry is right here. Our take profit should be above the previous high. This is above a previous high here, so we have a risk to reward of 1:1. Or you can also take your profits here, which is this previous high here, giving you a risk reward of 1.86, or you can as well put it right here. You see, we have a trade right here. This is giving you a 2.26 risk to reward, and have it in mind that this is also a fair value gap after this high, so it will be much more profitable if you take your profits here, because price might tap into this fair value gap and take this high and rally to the downside, taking you out again. So you just have to not be greedy and take your profits here. So that was our fourth trade, and you see that price still went ahead and took out this previous high here that gave us our trade. So this was a 3.28 risk to reward ratio. So the next we have is a fair value gap here. Let's close out this one and go on to our 15 minutes time frame. So this is our 15-minute time frame right here. We have two reasons for entry here, which is a fair value gap right here, and also a breaker right here. So this is a breaker and a fair value gap. We also have an inducement right here. So this is an inducement right here. Price takes out this previous low, tapped into this fair value gap and breaker. So these are all reason and confirmation for you to enter this trade. Yeah. So the next thing we need to look for is our break of market structure. So this is our break of market structure right here. You see this high, you see this order block. So price took out So price took out this high and created a fair value gap right here. This is a fair value gap price tapped into, and that was after creating this break of market structure. So the first thing that price did here was a fair value gap was tapped into, then created a break of market structure. Prior to that, it created a fair value gap right here. So let's see. On a 15-minute time frame, you can see it clearly that price tapped into this fair value gap and give us a trade right here. Our stop loss right here, and this is a fair value gap right here. So price tapped into this fair value gap, and we have to take our profits at the previous high right here, so giving us a risk to reward of 3.41. And you can see that price also took out this high here. This would have been another take profit right here, giving us a risk to reward of 4.7. And that was our fifth trade right there. So let's go on to our sixth trade. So we have a fair value gap on our 5-minute time frame here. Let's go on to our 5-minute time frame. So you can see on our 5-minute time frame we have a fair value gap, but before then there's a fair value gap here before price tapped into this fair value gap here. This is a fair value gap price tapped into. Let's go down. So this is our fair value gap. You can see from here to this spot here is a fair value gap right here. You put it at the end of this high that created this fair value gap, and you drag it here. The next thing you look for is after price tapped into this fair value gap is your break of market structure. So you can see here price closed below this low right here. You can see how price tapped into this fair value gap, closed below this low right here. You can see price closed with a candle here, also here. So price coming back, you have to be ready that this fair value gap that was created here, price will tap into it and rally to the downside, taking out this previous high, which is our inducement now. So what to look for on this our sixth trade is a sell position. So from here we'll sell, putting our stop loss right above this previous high, giving it space to breathe here right above this previous high. And you see your entry here, you either take profits at this low, giving you a risk reward of 2.43, or here, this is a good place to take your profits. And because we have a fair value gap here, you can also choose to take your profit right at the start of a fair value gap here, and that is giving you a risk reward of 4.61. So that was our sixth trade there. So since we have indicated that this is a fair value gap right here, we are anticipating that price would tap into it to give us our seventh trade. After price tapped into it, what did price do? Price created our break of market structure right here. You see how price created a break of market structure on a 5-minute time frame, as you can see here. And after price created a break of market structure, you have to look down and check, was there any fair value gap created prior to creating that break of market structure? Yes, there was a fair value gap here. This is our fair value gap, and you take your entry here. So this is a fair value gap that you can enter here, because price tapped a fair value gap here on a high time frame, or on that same 5 minutes. You can clearly see a fair value gap here was tapped into on this spot right here, and created a fair value gap and a break of market structure. Now price rallies down to tap into it. Let's take our entry. This is our 7th trade, and this is our entry at the start of that fair value gap. This is your stop loss right here below this low, giving it a space to breathe, about 1 or 2 pips. Then you take your profits right before a fair value gap. This is a fair value gap here, right before a fair value gap or a high. This is another fair value gap where you need to stop and take your profit here. So this is also giving you a risk to reward of 3.8 or a 4 here, right at the start of this fair value gap right here. So when you take entry here, you can take your profit here or here, and you can as well see that price took out this high, which would have been another entry right there. So you see that price entering your trade gives you a 5.03 risk to reward here, or at this spot here, right here, giving you a 6.7 risk to reward here, and you can take profit right there. This is a fair value gap right here. As you can see, this is a fair value gap right here, and price tapped into it. After price tapped into it, created a break of market structure right here. Price broke above this previous high, closed above it, and created a fair value gap right here, and you have your entry. And you put your stop loss right below the low that created that fair value gap, and your take profit right here or here. So that was another trade. So let me take this out and we move on to our number 8 trade. Price saw a fair value gap here. Still, this is a fair value gap. Let me draw it. This is a fair value gap here that hasn't been tapped into and filled up yet, and you drag it onto the right to anticipate that price will create a break of market structure. So price has not created a break of market structure around here yet, because this low did not close below this low. If this low had closed below this low, then we'll be anticipating an entry right here at this fair value gap. So but price found price created a break of market structure, right? But price created a break of market structure right here. As you can see, this is a break of market structure and this is a fair value gap. So our entry will be right here. This is our entry here, and we have a short position at the start of this fair value gap. We have a high. We need to put our stop loss above it, and we can now see our take profit to be here, right below this previous low. So you can see right below this previous low, you can see our take profits, or you can as well put it here below this low too. So this is a 3.95, about a 4 risk to reward ratio. But because of a fair value gap here, it's best you put your take profit right here below this last low, and you have a 2.58 risk to reward ratio. And let's see the number 9th. Let's see the number 9th trade we have. So on our 5-minute time frame, still we have a fair value gap right here. This is a fair value gap on our 9th trade. This is a fair value gap right here, and this fair value gap is coming from this fair value gap here. As you can see, this is a fair value gap. Price tapped into this fair value gap, created another fair value gap and a break of market structure here. You can see this is a break of market structure right here. Price closed below it and also rallied to the downside. After price rallied to the downside, you anticipate that price would tap into this fair value gap. So prior to price tapping into this fair value gap, you can see a break of market structure here if you are not yet to enter. If you were to enter here, let's see, for a short position right here at the start of this fair value gap right here, so it should have given you a risk to reward of 2.17 risk to reward at this low right there. Or price did not go beyond to tap this low right here. You can see price went back and at this spot and would have taken you out. But this is another trade right here. Let's take this out first. This was another trade right here. We have a fair value gap created here. You can see that price was coming from a fair value gap right here. Took out this previous high. This is a PDRE on its own. Created a fair value gap right here. And what you need to look for is a break of market structure, and we have a break of market structure right here. Price closed below this last low and created a fair value gap. So what we have to look for is a short position, an entry right here at the start of this fair value gap, and we have it. So this is our entry right there, and put your stop loss right above the high and your take profit here. This is your take profit right here at this previous low, and we have a 3.43 risk to reward ratio. So the next one we have is a fair value gap right here. This is a fair value gap right here on our 15-minute time frame. So this is our 15-minute time frame. You can see that price tapped here. Price tapped into this fair value gap right here. After price tapped into this fair value gap, it created a fair value gap right and a break of market structure. This will be possibly our next trade. You can see a break of market structure here. Price closed below this last low and created a high, an inducement right here. So what we are looking for on the next trade for the week, for this week, is an entry into this one right here and rally to the downside. So we might possibly have an entry here to the downside, but we have another trade here. When you look to your left on your, let's say on your 1 hour or 2 hours time frame, we have a fair value gap right here. There's a fair value gap right here. This is a fair value gap we have. So at the start of this fair value gap, you can see price has not fully tapped into this fair value gap or order block right here. So you have price tapping into this demand zone. This is a demand zone and a fair value gap, as you can see, and also taking out this previous low right here. Price took out this previous low. So what we need to look for is our break of market structure on a lower time frame, like the 5 minute or the 3 minute time frame. So on a 5 minute time frame, do we have a break of market structure? So yes, we have a break of market structure right here. This is a high, and price closed above this previous high and also created for us a fair value gap right here. You can see a fair value gap here. This is a fair value gap, and we might have an entry. We might have an entry to the upside right here. So we might have an entry to the upside right there. So price might come to this spot first, and you might take your entry for a short position right here. For a short position right here to this spot here, might give you a risk reward of 3.45. And at this spot here, let's take this one out. You might also have a long position when price rally to this side first, and you put your stop loss right below this low that created the fair value gap and take your profits here. You can see a fair value gap here, or you take your profits here. So price does not take you out after tapping into this fair value gap here to move to the downside. So there might be 2 trades here or just one, then you're just good to go. So let's take this out. So that's our projection for the start of the week. Alright, so we'll meet on the next episode. Peace.